Well, yeah, and I'm thinking, obviously you had the conversation with him, I didn't, but I wonder if he's talking about pockets of the stock market as opposed to the stock market overall. I have a heavy value tilt, Scott, and so if I look at industrials, if I look at materials and financials, I don't look at them and see them misvalued or wildly expensive. Now, if I look at software stocks, we've talked about those for a long time. If I look at some of the renewable energy stocks, I'll include Tesla in that. I'll throw that out there. I do think those are in bubble territory, and I wonder if that's what Mr. Icahn is referring to. For me, what that means, though, is where I invest, I'm not liable to get out at this stage of the economic recovery, nor at this stage of what I suspect is the early stage of a bull market.
But my point,
I want those value stocks that I've been waiting to do well. I want them to do well, and I don't want to mess with them. But
Jim,
go ahead, Scott.
My point is in part that just a week ago, 10 days, you bought Apple. Right? So you were going right into the heart of the mega cap growth market. NASDAQ up last year 43.5%. That doesn't say that you are looking for any sort of major correction in the hottest part of the market. Now, Apple is not one of these enterprise software stocks. I'll give you that. However, it is part of a cohort of tech which had a massive 2020.
And what that means, Scott, it's a great point you're bringing up, is that Apple may not be the market leader this year that it was last year, but at this price level, about 28.5 times forward year's earnings with low interest rates and the growth that they've got and the shares that they're buying back, it should be a nice positive returner this year. I'm not worried about Apple at all. Those other, those software stocks and the renewable energy. Look, take a look at QuantumScape, just as an example of what I'm talking about. This is speculative bubble fervor. The stock has zero revenues, and it's down 34% today, still has a $20 billion market cap. Was written up in the Wall Street Journal as having battery technology. I don't care how great its battery technology is. That is speculative mania. It's fervor. It's a tulip. And you know what? I'm sorry that QuantumScape is bursting right now, but that's not the sort of stock that I invest in, period.
Oh, yeah.
Full stop.
Bryn, I mean, okay, so how many QuantumScapes are out there that need to come back down to earth? And by the way, Carl Icahn may be the most notable name today to mention sort of concerns about where we are, but he's not the only. Morgan Stanley's Mike Wilson says the market is, quote, ripe for a drawdown. Further rotation is coming. We must acknowledge, he says, that the risk reward of the U.S. equity market has deteriorated materially, and the market is ripe for a drawdown. So you could put Icahn plus Wilson plus, whoever. Well, you tell me, Bryn, what do you think?
Well, I think to Jim said it, I think, very well, is that there's pockets of froth. And I think that, look at Zoom, for example. I mean, Zoom's down, I think, close to almost 50% from its high, earlier this year where it touched almost 600. But I think names like Peloton, Zoom, there's so many of those companies that just had extraordinary year in 2020 for extraordinary reasons. But I do think the only thing new in the world is the history we don't know. And to Carl Icahn's point, if you go back to 2000, if you look at Amazon in 1998, Amazon was at $5. A year later, it was at $131. And then by 2001, it was back to $5. And so it did a full round trip in about 2.5 years. Now, two decades later, we can all say, oh, well, that was a wonderful buying opportunity. But in this market, we tend to think in days, not decades. And so I think there are clearly areas that could have that type of sell-off again. But ultimately, as investors, that's what we get paid to do is asset allocate and find the areas that we don't think are overvalued, or just be settled in and ride that out. But I definitely think that we could have definitely a different year in 2021 than we had in 2020 in terms of what the big winners are, because those companies, even a Tesla, need to breathe.
Pete, are we about to have a big reset? I mean, is that what we're sniffing out here? That the market is ripe for a pullback, as Mike Wilson says, that there are pockets of it, that are overvalued or ahead of itself. Now, I'm paraphrasing off of what Carl and I spoke about a few moments ago. Yeah. Again, I use his words, wild rallies with a lot of mispriced stocks. What is that?
Right.
If for no better description, what is that code for? What parts of the market do you think he's specifically talking about, or which ones would you say are too wild and too mispriced at this particular time?
Sure, and I think that Jim hit on it right away. Some of the software names, Scott, I mean, obviously the moves that we've seen to the upside in some of those names, absolutely extraordinary. And I think it's not just those names. There are other names as well. But when you look across at what has really exploded, and then secondly, when you take a look at where the fundamentals are on some of these companies, I mean, we're not even rating them off of PE because there is no E. So we're looking at a lot of different names that have absolutely rocketed to the upside. Bryn just talked about Zoom, which was 600, give or take, before it's made this huge pullback that it's made. But there's a lot of different names out there that have not really made much of a pullback off of these highs. And I think, yeah, there's some frothiness there. There's no doubt about it. And we'll see some of those pull back. I think we've all been talking about this. We've heard from Tony Dwyer. We've heard from Mike Wilson, a lot of different guys, Tom Lee, to expect some sort of pullback. And I think that would be the healthy thing, because let's take a look at this run that we've had since November, December, an extraordinary run to the upside. We even finished out the week with a nice run last Thursday to the upside as well. So we've had nothing but what it seems to be all-time highs or new highs across different stocks as well as these indexes themselves. So there's no doubt about it. There's some frothiness in certain pockets. That doesn't mean that everything, and I think Jim touched on this as well. It's why I still continue to like the material space, for instance, and even some parts, believe it or not, of energy, where I think that when those names got beat, they definitely got beat. But I think that there is an opportunity for some of those names to possibly still reach to the upside. And absolutely, I love the financials as well, because they made a great run, but I think they have plenty of room still in the front of them, Scott.